Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to Jay LeCoque, Exec Chairman of SourceBio, a leading medical diagnostics and lab services firm. So welcome, Jay.
Hi, Paul. Thanks for having me back.
Yeah, well, hey, there's been lots happening since we last spoke, not least today's positive first half results, with sales up only 250% to just over 37 million pounds. So absolutely terrific set of numbers. I don't suppose you could sort of like quickly walk us through the sort of the key highlights, but maybe start with the COVID testing infectious diseases division.
Well, I mean, COVID's certainly a big piece of our results today. But having said that, our Q3 is even better than our H1 from a run rate perspective. But yeah, certainly COVID played a big part in it. The cell path business is doing very, very well. The genomics business is doing very well. Storage is coming back. I mean, everything I think took a bit longer to come out of the COVID pandemic. It was more lockdowns than we thought. But you know, the base business is great. We're generating cash and we're moving forward.
Yeah, obviously with the sort of like the COVID testing side of it, you mentioned you're talking about potentially substituting some of the PCR tests for lateral flow. How's that going to work in terms of delivery and commercialization?
Well, certainly, the news that came out on the 17th about different requirements for travel mean lateral flow will be more used.
Yeah.
We were ready for it. We knew this was coming. We've got two great relationships with two lateral flow companies. We're going to be effectively a commercial distributor, so we've got reach around large corporate accounts. We've got healthcare service providers that can take the lateral flow and use it. So we're seeing that as a nice incremental revenue stream on the infectious disease business. But it won't replace PCR. I mean, certainly PCR is going to come off from where it was at the highs. Having said that, we have seen a dramatic increase in daily testing volumes. Even today, we're probably at our highest rate of testing we've ever been at. We see that continuing through October. So, you know, the COVID business, while it will slow down once the government changes the rules, we were gearing up to do much more than that in Q3 and into Q4. So there's, we're balancing that with the rest of the business.
And what's the sort of the long-term strategy for that sort of that operation? Because obviously you've got some pretty good kit there, and you've got experienced people. Is there an opportunity to redeploy? Is it, or are you going to grow into other areas like lateral flow or other infectious disease testing? I mean, who knows when we're going to get another pandemic? You know,
I think it's going to be all of those. We're certainly going to take some of the kit. We've already repurposed it down in Cambridge in our genomics lab to do extraction services, which we haven't officially launched, but we are soon. Certainly, the people we have, we can redeploy them into the cell path business as that grows. The lab space we're going to move into. So we've always planned to take what we bought and utilize it in other pieces of the business. Having said that, there is an element of infectious disease that's going to continue. So we we are going to offer a flu panel, A and B, RSV plus COVID. That may be the new model for what people are screening for going into clinical applications like hospital admissions and staff in hospital. So there is a business there, but I don't want to overstate that it's going to be the same as what COVID was, because it won't be, but there will be an incremental revenue stream coming out of infectious diseases.
Yeah, and then just turning now to sort of like the previous core business, we go through the pathology screening and the healthcare diagnostics. I mean, if anything, given that the UK has had, basically a fabulous vaccination rate, which yes, has perhaps sort of like accentuated the COVID testing or reduced the sort of longevity of it, but it's equally strengthened that whole screening division, presumably.
Well, certainly cellular pathology, we are back to our highest levels pre-COVID. In fact, it's going to continue to grow on top of that. If you add in the digital capability that we're putting in, that's going to increase it even more. So yes, the business is coming back the way we expected, and we've geared up for it and we're ready. But I think it's going to grow much more. I mean, I think there's not only is there a huge backlog, we're still have a shortage of pathologists. All of the underlying business reasons for growth from our side are still there. Shortage of pathologists, limited budgets, limited capex at the NHS. So we're still seeing this business outperform where we thought it would be by this time, given where COVID just is, and people are still not at full capacity with elective surgery. So it's doing very well, and it could do even better, I guess is what I'm saying.
Yeah. So you get it. So what you're saying is that you're not only going to get sort of the market growing as we get back to elective procedures, but it sounds as though that division will win more market share as well. Will take greater share from the NHS because it will be outsourced.
Exactly. That's what's happening. There's a huge, I mean, that's where the market is. And that's what we're going to be leveraging ourselves into. It's, 285 million pounds are being outsourced right now, and that's growing. We're only a small piece of that. So we can get a lot more of it. So it's not really competition against other labs. It's a competition against getting that outsourced business from the NHS, which is happening.
Yeah. Okay. And then turning now to the genomics business. I mean, well, certainly genomic sequencing is one of the sort of the key legs going forward for all sort of healthcare and personalized medicine. So how's that going to play out? What sort of like, sort of importance and significance you see that division going forward?
Well, certainly we're still screening the positives for the COVID business, which is helpful. We are focusing more on biopharma. We're focusing on the bigger projects with the NovaSeq, and we're getting up to decent capacity utilization on that system. So it's just a space that we have carved out a very, I would say, higher level niche of offering, genomic testing services at a much better turnaround time than you might expect from other potential competitors. And it's just a growth business. I mean, there's more and more being done on next generation sequencers versus Sanger sequencers. So we're positioned well for that sort of shift into NGS.
And presumably the NHS likewise will start outsourcing more of that as well, I guess, because you need the expertise, you need also the the investment and the capex to go in there to buy these machines to do the sequencing.
I mean, yes, that's certainly an element of our growth strategy. But the other thing we're going to start focusing on are sort of startup companies that don't have the capability to invest in an NGS system, but need the data. Large pharma needs this capability. They don't always want to put their people on it. So that's more of an outsourced model. So there's a lot of different growth areas we're focusing on to keep the whole business moving forward. And it's doing very, very well. I mean, NGS is up very well over prior. We're very pleased with our NGS business.
Yeah, and then moving finally then to the stability storage business, how do you see that going forward? I would have thought that with the drug discoveries getting more and more important, particularly sort of like in potentially unstable new live drugs like biotech, that's going to again likewise increase in its importance.
Stability storage is doing well. The storage business, especially, is coming back very strongly post-COVID. We did see a bit of a slowdown with some of the kit sales and some of the service. You couldn't get out to the field. I will say that in San Diego, we had a little bit of a slowdown because when we moved facilities from LA to San Diego in the middle of the pandemic, people couldn't come and audit our site. So we kind of lost some of that business. We're slowly getting that back. That's impacted the numbers. But certainly the drug development, the genomics piece, our renewed sort of focus on selling the whole offering of cross-selling, genomics, stability storage. If you need tissue sampling, there's ways to cross-sell among the divisions that we're going to start doing more so this year. And so, yeah, we see a good future for stability storage.
Yeah, and as you say, for the half year, you've come out with a very healthy cash position of about £17 million, which I think equates to about 23p per share. And well,
actually, it's now at 20, and we're gonna say that, we've said that today. And we think with the working capital we can pull out, it might be 25ish range. And yeah, that's certainly a nice war chest to look at acquisitions.
Yeah, and what sort of areas would you do that with in terms of M&A?
We're looking at healthcare predominantly. Certainly, if genomics had an opportunity, we take a look at it. But we've got some candidates that we're actually talking to right now in the healthcare space that would give us a very strong position in the healthcare space and the cellular pathology space. So we're, without saying too much before anything happens, we're pleased with the performance. We've been focusing on this for a while, and we're starting to see the results of some of our work. And hopefully we'll have some news soon, and we'll see how it goes. And
will that be new services, or would that be basically adding to the existing capability and those key verticals you've got in the sort of the?
It would be incremental services than what we have right now in the same space.
Okay. And then if we look back at, you talked about sort of run rate compared to what it was pre-COVID, and I was just looking through the results you had, or the relevant turnover in 2019, and I think you did core operations roughly around about 20 million of turnover. Just sort of like hypothetically long term, I mean, it seems as though these businesses are growing as a group at roughly around about 15 mid-teens, something like that.
I would say that, yeah, CellPath certainly is growing at a much faster clip than that. Stability storage, let's call it 10.
Yeah.
Until they really get the cross-selling. NGS is growing at a faster clip. So yeah, you could say 12, 15%, yes.
Yeah. Okay. And then, so if investors want to run those numbers sort of like, 5 years forward, then you're getting not far from a sort of like 35-40 million pound revenue, sort of business. So at sort of like 20% EBITDA margins, you
Well,
get,
then you've got acquisitions you need to put on top of that. I mean, we've got the cash
yeah.
to do acquisitions, and that is going to impact the growth of the business. And that's one thing that I don't want people to forget that. We've got a, great base business. We pivoted into COVID, did a lot of good things, generated some cash. We're now looking to go into M&A. That's kind of that's where we're at.
Yeah. So again, I'd say to investors, if you want to sort of just do back of the fag pack valuation, you're looking at roughly, so say 20% EBITDA margins on that, excluding sort of the other acquisitions, and you're getting around, sort of 8 million of EBITDA, quite comfortably in 5 years' time, which on a 14 times multiple gives you a share price of over 150p. So
yeah.
And that's just your base business, never mind any of your cash and your acquisitions and stuff. So it seems to be pretty well supported, the shares.
I would agree with your assessment.
Yeah, and so going forward, then, sort of for the rest of the year, obviously you're still really very, very busy with all the testing in Q3, and that's getting busier and busier and busier. And then you've got the M&A on top. So I'm guessing you've probably got quite a bit of potential news flow coming.
Well, we certainly think that we do. I can tell you that October, as I said, our testing volume on the COVID side is higher than it's ever been. We expect that to continue through October. Certainly, it'll slow down November, December, but by that time, we'll have CellPath coming back even more strongly than it has. Certainly, some news flow on the M&A. Yeah, we've got a lot going on. So we'll have to see how we do.
Okay, well, looking forward. You've certainly whet my appetite there, Jay. Look forward to hearing. So thanks very much for your insights. And if anybody wants to follow the company, then just click the relevant button on the website. So thanks very much, Jay.
Great. Thanks, Paul, for having me. I appreciate it.